Welcome to the Old Guy AI podcast, brought to you by MongoDB. And now, here's Scott Sanchez and Pete Johnson.
Hello there. Today is Wednesday, November 5th, and this is the Old Guy AI podcast. I'm Pete Johnson. With me as always, or I should say with me again, is Scott Sanchez. And Scott, how was your week off?
My week of off-sites was great. And I caught the episode last week. Thought you and Matt did a fantastic job. So I know Matt had big shoes to fill, filling in for me, but he crushed it, and you guys nailed it as always.
Yeah, it was a good time. That was my first time doing it from a hotel room, and that was a whole post-production fun fest.
Big fans of our friends over at Riverside. Not a sponsor, but you could be Riverside. So we're big fans of everything Riverside enables for us here.
Absolutely. Well, let's get right into the news that Matt and I missed last week, the things that happened either the day we published or the day after. And the first of those is the dam has finally burst. OpenAI and Amazon finally are working together formally. They signed, or at least announced, a $38 billion deal. And I thought the most interesting part about it, was that the timing of this was so far in advance of reInvent. And number two, is specifically laid out that it was going to be for Nvidia chips, which is going to be important when we talk about one of the other stories a little bit later.
My thoughts were that I'm not really sure I'm not sure how this is different from any of the other deals, other than like continuing to source from wherever they can. So that was my kind of initial reaction was, is there some nuance in this deal that I'm missing? Or is this simply that AWS had a route to power and chips that OpenAI is struggling to achieve? And so for that reason, they're just going wherever they think they can find the capacity. Or if there's some, obviously AWS is an amazing global infrastructure and tons of customers. But, I think this felt more like they're just grasping for whatever power and chip capacity they're able to find. Did you take anything? I'm sure you read it in much greater detail than I did as usual. Did you squeeze out any nuance of what makes this interesting?
I think that's the most interesting part of it. For those that don't know, right, this comes on the heels of OpenAI restructuring so that they are now for-profit organization. What came out of that was that Microsoft still owns 27% of OpenAI, but they lose the exclusivity agreement that they previously had with Microsoft for a bunch of other things. And I would say the second step, we recognized a couple of weeks ago on the podcast when OpenAI dropped some open source models and Amazon picked them up immediately for Bedrock. That was kind of a baby step towards getting to know each other a little bit. This is a bigger step where they're starting to commit some funds, whatever committing funds means in this market, because we've talked about that before too. So it's a step to OpenAI diversifying beyond Oracle and beyond their own private. That's what I take for it for now. But like I said, I thought the Nvidia mention in the announcement was interesting, especially in light of the other announcement that Amazon made last week. And that was that they opened a data center in Indiana, and that Anthropic is now using about $11 billion worth of not Nvidia, but Trainium in that data center. So when you take those two together, I think if you look hard enough, it starts to paint a picture of OpenAI trying to diversify on who they're getting the chips from, but they're almost exclusively Nvidia chips. But Anthropic, based on the heels of an announcement that they had a couple of weeks ago where they were also starting to do some TPUs with Google, they're starting to diversify with the chipset in the way that OpenAI is not. And that might be a bigger story as maybe it's a nothing burger, but maybe that's the bigger story as we begin, 18 months out and see how those things might change. Is this a move? Is this move sort of away from Nvidia, or this move to diversify the chipset? Is that going to help Anthropic longer term? Is that something that OpenAI is missing out, or have they just not gotten there yet because they had to get through some of the legal hurdles?
Yes, and I think that was it OpenAI a couple of weeks ago that announced the deal with Qualcomm for inference chips?
It wasn't for inference, it was for accelerators. But yeah, that's on the infographic. And I did a big update to the infographic on Monday night after close of markets, and I readjusted the sizes of the circles to be accurate for what for what market cap was of the various companies as of Monday. I added Amazon to it. I added Microsoft and their ownership share. It complicated the diagram significantly, but yeah, among the things on that diagram is that they're getting accelerator chips from Broadcom.
Yeah, so I think that we're going to see a couple of things happen in the AI chip space. There's always going to be a place for the most cutting edge stuff, and right now Nvidia continues to sort of seem to lead on that. Certainly they've got the balance sheet to focus on it. But when you think about who's really truly driving innovation in the AI chip space, it is Nvidia. I think that what I'm seeing from the major cloud providers, from the other players, whether it's Qualcomm or anyone with "com" in their name, that are sort of playing in this space, is that they are going after the, let's call it mass market, where they're like the generation or two behind what you might call cutting edge, but they're going to sort of quickly be great for 90+%. Probably making these numbers up as usual, but I think that the overwhelming majority of training and inference will be able to be done on 2 to 3 generation old chips, which will be much more affordable, available, power friendly. Still going to use a crap load of power, but I do think that we're going to see that, and I think Nvidia has a long runway ahead of them, but I do genuinely wonder how this is going to impact their ability to create the kind of margins and backlog that they've been going after, that they've been building up, right? Their performance obligations are very large at this point, but there's just too much healthy competition forming up from some unexpected players. Like, I didn't expect Qualcomm to be, popping up and doing multi-billion-dollar deals for this stuff. Obviously, AWS and Google and Microsoft and everybody else are working on their own chips. And I think that's a really good thing. And so I'm happy that the exclusivity deal sort of unlocked for OpenAI, and they can go spread their riches around to different competitors in this space. And AWS certainly is a formidable competitor. And I'm glad to see them, being able now to throw their hat in the ring with arguably the biggest AI player.
So I think what we've seen in these announcements, there's sort of 3 tiers. There's sort of 3 interlocking games going on right now. And you just mentioned one of them. Nvidia has a huge lead on the chipset level, which is at the bottom. AMD is there, and they're getting propped up. They have this, unusual relationship where OpenAI might own 10% of them at some point. But they compete with Nvidia on some of that stuff. And then there's the custom chips that are also there. So Google's CPUs and AWS's Trainiums. And then above that, you have like the hosting layer. And so that's Azure, AWS, GCP, and now Oracle using that as a way, their relationship with Nvidia and OpenAI, to be a little bit more relevant in that space than they have been historically. And then you've got what are really the 3 main LLM providers in Anthropic, OpenAI, and Google. I think most of that market is made up of Gemini, Claude, and ChatGPT in some way. And tracking these relationships is super interesting. And how are teams starting to form, and do they form right now? Everybody's sort of getting along, but as we have these more complicated relationships, what happens when 2 parties disagree, and then what ripple effect is that going to have on the rest of the market?
I still think Grok is a bit of a dark horse, and I know some people don't always like its responses, or may accidentally turn on unhinged mode. But they're also not doing the kind of ridiculous deals that we see from OpenAI, or if they are, they're not publicizing it maybe the same way. They're just like quietly building what really is seeming to be a great product. Yeah, look, I keep bringing this up. More competition in the chip space is important, and I'm glad it's happening. I'm glad there are people with really deep pockets that are trying to go out and create that competition. As you were talking through the different layers in that stack, it reminded me that I think you created a model for this recently. And I don't know if you wanted to allude to any of that, the seven layer dip, or however you're referring to it.
Yeah. So what I did there was specifically with agentic commerce. And what I'll do with emerging technology every once in a while is I'll try to map it to the 7-layer OSI model, just because that is a proven way of what are different layers in a more complicated stack. It sort of establishes lanes of responsibility and handoffs. And yeah, I spent some time on Sunday based on a comment that I got on Substack, and then on Monday trying to iterate over. And yeah, I do have a diagram that attempts to map agentic commerce to the OSI model. And I probably need to do that for the stack that I just described, that there's these 3 levels of players at the chipset level, at the cloud hosting level, and at the LLM level. But to your point, Grok is notably absent from this ecosystem. Meta isn't absent, but they aren't as involved as some of the other players. It's been, I think the last time we looked at a market share diagram was back in July, maybe, or August. And at the time, the big 3 LLMs were, as I just said, some combination of Gemini, the Anthropic Claude models, and the OpenAI GPT models. But, to your point, Grok and Llama are out there looming. I think it's only a matter of time before we get a paid version of a meta model in one way or another. And I also think like the least surprising announcement that we're going to get at reInvent here in about a month would be if when we get GPT-5 access on Bedrock as a per token SaaS. So it'd be interesting to see how these things all play out and if I'm right about that prediction. I not only think I'm right about that prediction, I think it'll come in the first 30 minutes of the keynote, but that's just me.
We used to play like the new services drinking game at AWS at reInvent, right? So like how many new services would they announce? And that has trailed off. They still obviously announce and come out with new services, but I appreciate that they are, going deeper and broader with some of the core services they have. And just means it's less for us old guys to keep track of. Like once we got past like 40 services, even when I worked there, it was like, I think we have a service for this. I have to go look up. Oh yeah, we do have a service for this. And now it's just so many, right? Like same thing with regions. At MongoDB, Atlas runs in 115 global regions across all 3 cloud providers, and it's just so much optionality. And I hope with AWS and with the other providers as well, to your point, that like we start seeing Bedrock become, continue to sort of reinforce this is the place where all this happens, instead of maybe it just becoming more and more and more and more individual slices of service capability. It just means you have a more robust service that more people are able to build around. And I like what they've been doing around Bedrock.
Somebody one year, so when you and I were part of that Twitter Cloud Beers group in like that 2013 to 2017 era, somebody one year made bingo cards. It wasn't a drinking game, but it was bingo cards around what Jassy was going to say and who, which customers were going to come out and talk about how awesome AWS was and those sorts of things. And my favorite square on the bingo card every year was in what 30-minute block was Jassy going to take a shot at Larry Ellison? Because he did that for like 6 years in a row. He would sneak in a picture of Larry in his keynote deck in one way or another. They don't do that anymore, but for a very long time, they did that. And that was my favorite bingo square when we would all watch the AWS keynote together, as we will in another month.
We will. Absolutely. All right. Well, what's next on our packed agenda today?
So the other 2 things that I've got on the agenda was the Information ran a report earlier in the week that Anthropic has now upped their guidance on their 2028 revenue. They're now thinking that they're going to be closer to 70 billion, where before, let me find it again. So their previous guidance thought that they would have somewhere on the order of 30 billion by 2028, but now they more than doubled that their now optimistic projection is what the information calls it, is closer to 70 billion. That's still well below the 100 billion that OpenAI is projecting by that 2028 deadline. How realistic is the doubling of that? And do you think it's still underestimating what this market might have?
I think 2028, you said?
2028, yeah, 3 years out.
I think if they're not doing 70 billion, there's going to be a lot of disappointed investors. And I think that I hope that they're being conservative, frankly, with that number. We've seen what some of the market is in terms of demand for this. And 3 years from now, if they can't finish the year at that kind of run rate, at least, they may not earn 70 billion, but they may, be in the kind of run rate. I would question the viability of the business, just given how big the market is overall.
Well, so earlier in the year, they projected they'd be at 9 billion ARR by the end of 2025. They were targeting somewhere between 20 and 26 by the end of calendar 26. So this is roughly if you stay on that trajectory, and if you're at the high end by the end of 2026, you got 2 more years to a little bit more than double, or to add another 50 to that 26. That seems reasonable to me if that run rate hits. But it's always, the multipliers are always hard when you get into that much money. It's always hard to, some of those estimates and some of those projections start to fall apart. I'm glad they raised it. As I think we've talked about here before, I kind of like Anthropic's position just a little bit better than OpenAI's, even though OpenAI is now through the legal hurdle that they hit before. But given that they got a fresher, albeit later start, Anthropic has been a little more below the radar on some of the announcements. As we talked about a few minutes ago, they're starting to diversify very conscientiously on chipset. And they've been going way bigger after the API market than the consumer market. So I think they're probably cool with the idea of being behind OpenAI. But I mean, even if you're second in that market, like 70 billion ARR, nobody's gonna get upset at that.
No, and we talked about this in one of our very first episodes. Just that I feel strongly that Anthropic's, at least today, Anthropic's margin profile just has to be way better than OpenAI's at this point. They're all losing money, just to be clear. Like, they're all very upfront about we're all losing money. It's just like, I think Anthropic is probably losing less money per token than OpenAI is at this point. And to your point, sort of the niche that they're going after and their vertical strategy to go really deep with certain use cases, I think will only help their margins. There was an interesting, we texted about it, I think, a few days ago, that OpenAI put out some tweets about Sora, that the economics are just completely unsustainable. I'm summarizing, but I think that was like literally the quote, was that the economics of Sora, the way they're providing it now, are completely unsustainable. And we did some back of the napkin math about like, what does it cost to generate a frame of video? And these things are 8 seconds long, and, all of that. And, it's costing them like many dollars per month just to provide sort of the free access that they're providing per user times millions and millions and millions and millions of users, right? So they're switching to you get this many free, and then we're going to sell you tokens for generations beyond that. I think we're going to see, as these companies become more of a business, that I think you're going to see things that were free start to be less free, and the paywalls start to go up as they realize, like, okay, we actually have to make some money here at some point. This stuff's expensive. Building nuclear power plants and filling data centers with expensive chips and hiring the smartest people in the world actually costs money. So I like where Anthropic is. My biggest, if I was an investor, looking at where we are now. I think the biggest risk is the advancement of cheaper and or open source, open weight models that are good enough that it disrupts some of the primary money generating use cases for someone like Anthropic. So like if they're going after, specific industries, or if they're going after coding use cases or those types of things, like it won't be long before a bunch of free models, you still got to run them, are just as good as what there is now. And I think for a lot of companies, they're looking at what exists now is like really, really good, and good enough to start augmenting and replacing a lot of expensive processes in their business. So if we get 18 months from now, you don't think that the open weight models are going to be as good as what exists right now? I do. And so then there becomes this question of like, well, chips have gotten cheaper and more available. I don't need the highest end stuff. I can go with 2 or 3 generations old. I can run this open weight model inside my systems up in the cloud, not pay these like super high premiums for API access to a hosted model. The cloud providers are still going to be really happy. They're selling all the resource. But if I'm an Anthropic or I'm, someone else selling API access to an LLM, that's where I feel the most threat is going to be. Like, how differentiated can I be over what's going to be available for open weight and or significantly cheaper distilled models and other things that we know are already out there and are just getting better every single day.
Well, and you said something important there, I think, which was the money generating use cases. And this is where, maybe my fondness for Anthropic's focus might be short-sighted, because say what you want about OpenAI, and I have, they've got some diversity in the portfolio, the product portfolio there, that's interesting. Whether, they're finding out, Sora is not sustainable. They've got the secret, Johnny Ivy stuff going on. There's some kind of AI enhanced personal device that will be on the roadmap at some point. They've got the browser that they started to have. So they do have some diversity here that, should what you're laying out happen, they have other things to fall back on, in a way that, since Anthropic has really been focused on the core models, and up until this point, essentially either a desktop or a CLI version of them, because that's really what Claude Code is. And now trying to, their latest is modifying that experience for the financial services market. But that's way more focused. But, that has its pluses and minuses, given the scenario that you're talking about. At some point, when there's more competition in the model, and it will likely come in the form of those open source free weight models, that's when the diverse OpenAI's diversification might help them quite a bit. But it'll be super interesting to see how it plays out. And that's how, all these different relationships that I've been tracking on the infographic, once one domino falls, who all is it going to impact in that ecosystem in different ways?
Yeah. I keep thinking about the Nvidia, what's it called? The Spark that they put out.
Yeah. And I talked about that last week.
Yeah. Like that's a $4,000 ish machine. There's going to be a lot of competition in that space, I think, over time, as chips and other things continue to get cheaper and more available. If you're a business, I just saw a picture. JP Morgan's new $3 billion headquarters opened in New York over the last couple of weeks. And I saw this picture of this giant trading floor. And, you have to imagine that a lot of what, companies like that are going to roll out to fill up those trading floors is going to have a lot of AI and inference and reasoning built into it. Like, are they going to continue to pay per token for a hosted model? And I have no idea what JP Morgan's doing, but just to use that as an example. Or are they just going to spend $4,000 to put one of these things on everybody's desk and run local models that are faster because they're local? They're just as good, again, looking 18, 24 months out. For that reason, I do like the idea of what OpenAI is doing, trying to take the great models they're building and apply them to actual solutions and problems, right? We want to make this experience better. We want to make that experience better. We want to solve this problem. We want to solve that problem. That's very different, at least from the public roadmap that we see from Anthropic, which is like, we want to build these amazing models that go really deep for specific use cases, but you still have to turn that into a solution for your business. And I think, very different play. OpenAI is going after, like, we want to bring you the solution. Anthropic is saying, we want to bring you the ingredients. And, we'll see. We'll see how well this episode ages over time. But I think history has shown us that solutions win over ingredients in the long run in terms of making money. And, the ingredients might be further ahead now in terms of developer utility, but the solutions always seem to attract the dollars when it comes to business utility.
Well, and just because you're making ingredients today doesn't mean you can't pivot to make full-blown solutions later too, right? So that's another thing that maybe Anthropic is just biding some time and waiting before they commit to, as you put it, put the ingredients together for a full-blown product.
Or they're quietly doing this and working with a whole bunch of customers. OpenAI tends to take I don't know. I'll use the Microsoft example. Microsoft for years would talk 3 or 5 years out in terms of what they're solving. And then you have the AWS example, which is hey, here's this thing and we shipped it and you can use it today. And that's the first time you ever heard of it, right? And they couldn't be further apart. And I think a lot of what we're seeing from OpenAI is very forward leaning and looking. They put out an early preview of something, but it's going to be a year or 2 years before anybody would actually use this stuff, where, I don't know, maybe Anthropic is pulling in AWS and quietly building and testing and working with customers on a lot of this stuff and, just not talking about it until it's ready to ship. I have no idea. I'd love to know. Please, if you want to come on the podcast, guys, we will have you.
Yeah, I don't know the answer to that either, but good thing to think about as we move forward. You got anything else, or you think we're done for the day?
I think that's it. I mean, we've invited the leaders of the AI world to come onto the podcast. I don't know what else there is to do. Just wait for them to call, I guess.
Good enough. Well, thanks everybody for listening. Thanks, Scott, for the time. Until next time.
This has been the Old Guy AI Podcast. Views expressed here do not necessarily reflect the opinions of the sponsors or the employers of any hosts or guests.